Managing cash flow in a business is one of the most crucial skills every entrepreneur needs to master. Whether you're running a small side hustle or managing a growing enterprise, understanding how money flows in and out of your business can make the difference between thriving and barely surviving. Here's a breakdown of actionable advice to help you not just manage but optimize your cash flow. First, know your cash flow inside out. This means keeping track of every single dollar that comes in and goes out. The best way to start is by creating a cash flow statement. It doesn't have to be overly complicated. Even a simple spreadsheet can work wonders. List your income sources such as sales, investments, or grants, and then track your expenses, including rent, salaries, utilities, and inventory costs. This document will be your compass, showing you where your money is going and when it's coming in. One way to smooth out cash flow is to align your payment terms with your cash flow cycles. For instance, if you're running a seasonal business where income spikes during certain months, negotiate payment terms with suppliers that allow you to pay when your revenue is highest. Similarly, consider offering incentives like small discounts to customers who pay early to accelerate cash inflow. Avoid one of the biggest pitfalls of poor cash flow management: overestimating revenue. It's tempting to count on future sales as money in the bank, but in reality, those sales might not materialize as expected. Always plan your expenses based on what you currently have in the bank, not what you hope will come in. Another critical strategy is maintaining a cash reserve. Think of it as your business's emergency fund. Aim to set aside at least 3 to 6 months' worth of operating expenses. This buffer will help you weather unexpected slow periods, economic downturns, or unanticipated expenses like equipment repairs. If you're struggling with inconsistent cash flow, consider diversifying your revenue streams. This could mean launching new products, offering additional services, or even renting out unused business assets. For example, a bakery might sell baking classes during slower months, or a photography studio might rent out its space for events. Invoice management is another overlooked area that can significantly impact cash flow. Send invoices promptly, and don't hesitate to follow up on late payments. You can even automate this process using invoicing software that sends reminders to clients who haven't paid. Late payments are one of the biggest cash flow killers, so be proactive in collecting what's owed to you. Don't forget to prioritize your expenses. Not every cost in your business is essential. Separate your expenses into needs and wants. While marketing campaigns, new equipment, or an office upgrade might be desirable, they're not always critical to your business's survival. When cash flow is tight, focus on paying for essentials like salaries, inventory, and utilities first. Keep an eye on inventory management as well. Too much stock ties up valuable cash that could be used elsewhere, while too little might result in lost sales. Use data analytics or inventory management software to ensure you're striking the right balance between supply and demand. Technology can also be your best friend. From cash flow forecasting tools to accounting software, there's no shortage of tech solutions that can provide real-time insights into your financial health. With these tools, you can predict cash shortages before they happen and make adjustments to avoid them. Outsource non-core activities to free up cash and focus. For instance, rather than hiring a full-time IT person, you could work with a freelance tech specialist only when you need support. The same applies to areas like HR, marketing, or accounting. Understand the timing of your expenses. If you're paying bills on the 1st of the month but most of your revenue comes in on the 15th, you'll likely face a shortfall. To solve this, negotiate payment terms that better align with your income schedule. Small adjustments in timing can have a massive impact on your cash flow. Monitor your cash burn rate, which is the rate at which your business spends cash over time. This is especially important for startups and growing businesses. Knowing your burn rate will help you understand how long you can operate before running out of money, and it gives you the data you need to make critical financial decisions. Leverage credit responsibly. Lines of credit or business credit cards can be lifesavers during temporary cash flow gaps, but use them wisely. Avoid relying on credit for everyday expenses and always have a clear plan to pay it back. The goal is to use credit as a tool, not a crutch. Analyze your fixed versus variable costs. Fixed costs like rent and salaries remain constant, whereas variable costs like materials or production expenses fluctuate with sales. By converting some fixed costs into variable ones, for example, by renting equipment instead of buying it, you can make your cash flow more adaptable to your business's revenue fluctuations. Another technique is to shorten your cash conversion cycle, which is the time it takes for your investment in inventory or services to turn into cash from customers. Evaluate every step of your operations to speed up this process. For instance, if you're a manufacturer, reducing production time or outsourcing non-critical steps can help you receive payments faster. Introduce subscription or recurring revenue models. This provides predictable, steady income, making cash flow more consistent. A gym offering monthly memberships or a business selling products through a subscription box model are great examples. Customers appreciate the convenience and you benefit from dependable cash inflow. Regularly negotiate with suppliers for better payment terms or discounts. This extra flexibility can bridge cash flow gaps or reduce costs significantly. Monitor economic trends that affect your industry and prepare accordingly. External factors like inflation, supply chain disruptions, or interest rate hikes can directly impact your cash flow. Staying informed allows you to proactively adjust your business strategy to navigate challenges effectively. Take a closer look at your pricing strategy. Underpricing your products or services might attract customers, but it could also hurt your profitability and cash flow in the long run. Conduct market research to ensure your pricing reflects your value and covers all your costs while still being competitive. Regularly conduct a cash flow audit. This involves a deep dive into all income sources and expenses to uncover inefficiencies or hidden leaks in your finances. You may discover recurring charges for services you no longer use or expenses that could be renegotiated or eliminated. Think about offering tiered services or product bundles. By creating premium options or bundling multiple products at a discount, you can increase the average transaction value. This generates more revenue from existing customers, boosting your cash flow without requiring additional marketing spend. Be proactive with tax planning. Unexpected tax bills can wreak havoc on cash flow. Work with a qualified accountant to take advantage of deductions, plan for quarterly tax payments, and ensure compliance to avoid penalties. Knowing your tax obligations ahead of time helps you plan your cash flow more effectively. Explore government grants, subsidies, or small business loans. Many industries and regions offer financial incentives to support businesses. These can be a valuable source of cash injection, especially during growth phases or challenging times. Use a rolling cash flow forecast. Unlike traditional budgeting, a rolling forecast is updated continuously, giving you a real-time view of your financial health. This allows you to adapt quickly to changes, seize opportunities, or address potential issues before they escalate. Finally, continuously review and refine your cash flow management strategies. Markets change, customer behavior evolves, and new expenses crop up. Make it a habit to revisit your cash flow plan quarterly, if not monthly. Adjust where needed to ensure you're staying ahead of potential issues. By understanding, tracking, and optimizing your cash flow, you'll not only keep your business afloat but set it up for long-term success. Cash flow isn't just a financial metric, it's the lifeblood of your business, and managing it well means your business can grow, innovate, and succeed no matter the challenges.